Hey, what's up everybody? Welcome back to my channel. In case you're new here, I like to talk things all personal finance as well as what my portfolio is doing and how it's performing. And for starters, I just want to start by saying thank you to everybody that showed some love on the last video. That has gone beyond any of my expectations ever since posting a video here on YouTube for everybody to enjoy. Again, like I said from the get-go, this is really just for educational purposes and to kind of show you guys, you know, what it's like if you really set the time aside to figure out your finances, set up a budget, and then start investing actively. Actively doesn't necessarily mean picking stocks every single day. It can be as simple as just intentionally putting money towards the market, towards things that you believe with the proper research will perform and do well in. So today, obviously, as you see, I'm driving. I kind of wanted to do this as more of just like a chill, like we're hanging out conversation as I talk to you about what it is that I have going on with my portfolio. So I wrote down some notes. I'm gonna talk through them and then let you guys kind of be the judges at the end once the video is posted. So we'll go ahead and run through some of those notes right now. Before we did though, I just wanted to say that I have been putting chapters in most of my YouTube videos now, and let me know if they're helpful to you guys. I like to think that they are, so that way if you don't want to hear one portion of my video, you can very easily figure out what the next portion is going to be about, or if you want to go back and, like I said, just kind of hop around, it's much easier to do so. So let me know down below if that's something to keep doing, even though I probably will anyway. I'm at a red light, so for a sec I just wanted to, I'm gonna try to stay a little bit more organized in the videos, and so I'm started to take down some notes as far as what I want to talk through with you guys. So let me know if that quality kind of helps you guys a little bit as the viewer, but even as, you know, the creator of the video, it really helps knowing kind of what we're going to dive into. So I took the liberty of writing down some of what my old investments were, as well as some action plans that I have coming up for the next week, because going back to the introduction, I think it's important to always stay on top of your investments. As much as they may be a set it and forget about it strategy, it's also important to check up and make sure that that strategy is still working for you and that you're tracking where your money is going and how it's performing, because things can change last minute. This is the stock market. Nothing is predictable. While things may be historical, there's no guarantee with anything. And as I kind of walk you guys through my portfolio, this is just what works for me, and this is in no way meant to be financial advice. This is, again, for educational purposes and to serve as sort of a motivation that if I can do it, you guys can do it, because trust me, I'm not an expert. I haven't been doing this very long. I'm a beginner, but I'm here and happy to share with you guys what I learned, so that way maybe if I do make mistakes along the way, you know what to look out for. So with that said, referring back to the list that I had written out, in my portfolio, I invested in a number of ETFs, some of which caused a lot of overlap in my portfolio. So I wanted to sort of simplify that and build it out in a better, stronger way that's a little bit more clear and concise and easy to track. I think it's going to be helpful for myself, but also just to, you know, make things a lot more cleaner for, you know, tracking purposes. And so how it was originally set up is I have two different brokerages. I have Fidelity and I have Robinhood. I also have Coinbase, but I'm kind of leaving crypto out of the conversation for the time being, as this is mostly geared towards stock performance as well as stock picks, or ETFs I should say. And so in my Fidelity account, I have two separate accounts. I have my Roth IRA and I have my individual account. In my individual account, I was investing in VTI, VOO, and TSM, Taiwanese Semiconductor Manufacturing or something like that. I think that's what it stands for. But in my Roth IRA, it's 100% VTI. Now, in my Robinhood individual account, That's the only Robinhood account that I have. I don't have a Roth IRA in Robinhood. I just have the individual account with some crypto as well. As if you've been seeing the videos in my series, you know that I do have mostly just Bitcoin, Dogecoin, and Ethereum in my portfolios. So with my Robinhood individual account, I was investing in SPY, QQQ, VXUS, and SCHD, which are all fine picks, but they don't necessarily pair well together because a lot of them cause overlap. And that's what I was trying to clean up for myself, as well as just be able to consolidate where that money was going, how it was allocated, and see if it could be put towards something better. When I say better, obviously that's entirely subjective, because what may be good for me may not be in your best interest, which is again why all of this serves as simply advice and motivation. But the way that I want to restructure my portfolio to look like is a total asset allocation of 60% US stocks, 25% international exposure, and then the rest, I think, being 15% being in bonds. I think bonds sort of help mitigate a lot of risk. I'm not entirely risk averse, obviously, but I do like to be cautious of how the market has been performing as of recent. And I think being diversified and having a little bit of exposure to the bond market can be a good way to sort of offset any potential losses in the near future. The way I plan to invest my assets now is going to be so that 60% that I was sharing with US stock is my Roth IRA is going to continue to be 100% VTI. The reason why I like VTI is because it's a US total stock that tracks both the S&P 500 as well as mid and small cap stocks. So it's a little bit more of a complete ETF that allows for a little bit more that allows it to be a little less volatile than maybe say something like a pure S&P 500 index ETF like VOO or SPY. And so now going back to SPY, I plan on holding SPY mostly and only in my Robinhood account. The reason why I'm keeping it in Robinhood versus Fidelity is also for easier tracking, but because in the near future, if I do want to dip my toes into SPY, I've heard that SPY is better to get into options trading rather than something like VOO or VTI due to its liquidity as well as its tighter spreads. So hopefully that remains true, and in the near future when I'm ready to start learning about options, or even have enough shares, of course, because I don't have nearly enough shares of SPY to even be entertaining options. But when that time comes, that's why I want to be prepared for it. And the expense ratios compared between VOO and SPY, they're not that far off when you look in the grand scheme of expense ratios. For my international exposure, I have VXUS in my Robinhood account, as you guys have been seeing. But now it's time to go over a little bit of a personal history lesson of myself. When I first started investing, I opened up a Robinhood account because I just thought that that's what you do. You set the money aside, the $5 a week or whatever, and then it invests the roundups for you. I've had that account up until maybe 5 days ago or so, and that's when I initiated a transfer of assets, because I think it's time that I've outgrown the Robinhood account and can start managing my own money and setting reoccurring investments through my brokerage like Fidelity or even Robinhood if I really wanted to. So I'm in the process of waiting for those assets to transfer over, but when looking at that portfolio, I had a lot of VOO inside of there, as well as IXUS, the counterpart to VXUS for the international exposure. Because as I mentioned, I'm going to sell off the VOO because I don't need it personally. I'm going to stick with SPY. Now, when it comes to international, I only have a little bit of VXUS, and that's as of recent. But most of my international exposure is going to be IXUS, and that was through Acorns, what they were investing in. So once those assets finally transfer over to Fidelity, I plan on selling the VXUS come Monday and then buying IXUS, so that way it's easier for me to track my international. So, and then also it doesn't make sense to hold both IXUS as well as VXUS because they are quite literally identical and have had very similar performances. I think IXUS has outperformed VXUS as of lately, so considering that I've already been holding a significant amount of that in my Acorns account, I'm just going to continue with that one. And moving forward to my bonds portion of my portfolio, I'm going to be investing in AGG as well as ISTB. AGG is a long-term bonds ETF, I believe ETF. Don't quote me on that. I'm driving and I can't research it. And then ISTB is going to be for short-term bonds. And again, given the way that the market's been performing as of recent, all of the news headlines and articles, and just kind of the overall economy, I think it's going to be wise to start holding a little bit more shares in bonds. Maybe as time goes on, I may increase that percentage from 15 to something like 20, maybe high as 25% asset allocation in my portfolio. But again, that's why I'm creating this series and documenting it, so that way you guys can kind of see how I'm navigating the market. But that's how I want to sort of consolidate the portfolio of mine. In my US total stock market, it's going to be ticker symbol VTI as well as SPY. Those are going to be my two ETFs that I'm tracking. And then I'm also going to be holding QQQ, of course. That's just to kind of help, you know, boost that tech investment of mine. But I'm not going to be super heavy in QQQ. It's just going to be part of my US total stock. And then my international exposure is going to be IXUS plus the TSM that I've been holding in my Fidelity account, because although it's an individual stock, it is a international company, being a Taiwanese semiconductor company, so that falls under the category of international. And then for my bonds, I'm going to be holding AGG as well as ISTB, and to me that seems like a well diversified portfolio for the time being, and I'm going to continue to update you guys how it performs. And I'll throw in a market summary for the past week right here that I have been tracking. And to me, it's really cool once you start sort of tracking how these things perform. I'm sure a lot of you guys do. For me, like I said, I'm new to the game, but I also really enjoy organization and tracking and building out these spreadsheets as well as budgeting. So it really helps to see these numbers on paper, online, however you want to look at it, and then just kind of go from there. And again, we're trying not to be emotional with the market, because yes, there's ups and downs, and it was down for a while and then it was up. So we just gotta stick with it and keep pushing forward. It was pretty cool to hit 10K, honestly. I know I didn't really talk too much about it in my last video, but shout out to Tommy. I'm gonna put his handle right here. He spotted it out for me, because like I said, I posted the video and just kind of casually threw in. I went from like 8.9K to 10.7 over the span of July, and yeah, broke that 10K seal and am now steadily climbing past it. Can't wait to see what August brings, but you know, it's cool to be able to celebrate the wins like that, especially with the community that I'm sort of trying to build here. And for you guys to spot that out, it's been really, really neat and means a lot to me. So I can't wait to keep, you know, showing what this portfolio is going to continue to grow into, because remember, the goal is 100K, not 100K net worth, because that would be a lot easier to achieve in my opinion. We're trying to go for 100K invested, and ideally 100K invested, not including my Roth IRA, basically, because I won't be able to touch that money until retirement age anyway. So why bother counting it? Because it's not like it's going to really yield me any positive results that I need right this moment. So again, that 100K goal is for 100K invested in an individual brokerage account that we can just sort of keep playing with. And yeah, 10K, we're 1/10 of the way there, so we're gonna keep that going. But that's all I have for this video. I hope that you guys enjoyed me laying out what my investments are gonna continue to look like for, you know, the foreseeable future. As always, they'll remain active and they'll remain updated, and I just have a good time honestly throwing these videos on here for everybody to kind of take a look at, because that's how I've gained a lot of motivation to you know, really kickstart this journey again, because again, I have started it before and then I've fallen off, but this is just what I'm passionate about, and I want to share that passion on here with you guys, and help anybody else along the way that, you know, may need it or may need that encouragement. That's what I'm here for. And so I hope that you guys continue to inspire each other's down below in the comments, and leave a like, maybe subscribe if you enjoyed what you heard so far, and I'll catch you guys in the next one.